Okay, I think I am on. Let me go to my channel here. Oh, why is it? Where is it? Where is? Here we go. Okay, I'm on. Let me pop this up. Okay. Good morning, everybody. Nobody's here yet, but it's live. Sometimes you just have to talk to yourself. Okay, so let's see. Oh, howdy, what's up, Michael? Thank you for joining. How are you doing this morning? Anything news happening? Any other stock you're looking at it besides GME? just teasing you. I feel like GME is the only one, right? For now. Okay, let me look into. Hi Sharon, thank you. Appreciate you joining. Now, not much today, obviously. I'm just gonna babble on a little bit about the chart, and we'll look into the earnings as well. Just excited about Jamie. Great. All right, let's do this. So, we got the announcement already. I'm sure you guys are aware of this. June 11th. Now, every time I see something online, I don't usually like on X or whatever. I know people are enthusiastic about, tracking GB and all that stuff, but I always take it with a grain of salt because again, if this doesn't comes from, the source, I don't necessarily believe it because sometimes, they kind of like, well, last time they were trying to steer people. It's like the earnings was like a week before or something like that. Some article comes out and say, oh, GME lost this and that. Try to mislead people. I've never seen anything like that where, every company's, every publications out there that are deliberately, having articles and headlines that's kind of like bashing the stock and not getting in trouble for it. And again, like the SEC doesn't, really do much to protect GameStop, in my opinion, obviously. And the opinion is based on, the evidence that I got. I think, with the coin thing, I feel like they should do something about that as a regulator, and I think that's detrimental to the whole market in general. But for some reason, I bet you anything if they have a coin, like the meme coin, on Apple or any other company, they would have gone after that. But since it's GameStop, mostly retail owned, they don't care that much, right? But if institution would have owned most of GameStop, I'm sure they'd probably be up in arms about that, protecting it left and right and issuing, warnings. At the very least, issue the warning saying like, hey, the coins is not allowed to trade and all that stuff. Like they have the power to do that, but they didn't do it. But anyways, it's just my thought here. Okay, so can you guys hear me clearly? Because I'm a bit far away from the phone, the microphone. So if you could let me know. Is it good, better, worse? Just let me know quickly. If not, I'll just continue talking quietly to myself. Okay, so let's continue. Okay, so let's do that. But I think I saw something. Okay, thank you, Sharon. I think I saw something that our shareholder meeting is on June the 13th. June the 13th. So let me see the calendar real quick here. June the 13th would be on Thursday, right? The shareholder meeting. So that's going to be exciting. Now, I don't know, on the 11th, we already kind of expect what the balance sheet is going to show. You know, the first fiscal year, a quarter fiscal year 2024. And so this is kind of like the preliminary release a couple weeks ago. So I'm sure the numbers is kind of close to this particular one. Now I'm using the most conservative ones, right? Numbers. So that means like they could make more than this. Like, and I always use like the maximum expenses and minimum, the lower range of revenue here. So again, this might not be 4.9, it could be 5 even, right? $5 billion. And this is trailing 12. So I just add 4 quarters right here. 1, 2, 3, 4. This is the first quarter. This is the number that they released early. And so the projection is this, right? I mean, my kind of like based on what I saw, and then you just add it to the, you know, the other quarters already that, you know, we see for sure. Now, net income is going to come around $20 million in the plus. That's always a good thing, right? Even though the net, I mean, the revenues is down. I'm sure the headline's going to be like that. Oh, GME is going to be declining again. So just be, you know, aware that the price action might be, you know, to the downside. Temporarily, obviously, they're going to try to do some shenanigans or gap up. Who knows, right? Everything's happened for a reason sometime. And I think, you know, the option chain is kind of like telling us that, you know, it does want to go up. But I'll show the price level in which I was looking for too. Gross income and all that stuff, we kind of like know what's going on there. Interest income, I'm sure, you know, with the monies that we raised, we're gonna do something to it. Hopefully we're not gonna do much. I'm hoping that they're gonna try to be safe and put in the marketable security, maybe like, you know, $250 million, or even just the whole $1 billion, right? Think about it. If they just put $1 billion in the treasury bond, that would give them $50 million a year. Just $1 billion in the treasury bond. I know people's like, you can't run the company that way. Well, this is the safest way, right? In the economy that we're dealt with right now. So let's just see. That's $1 billion. People scoff at $1 billion for some reason. It's like, that's nothing. It's like, really? It's nothing to you? So at 5%, I'm sure it's probably 5.5%. And there has been talk that the Fed might have to raise another time, 25 basis point, because inflation is kind of sticky. And so with that prospect, I'm sure, you know, the rate's going to go higher as well. Now, while every other company on the planet is in debt, GME is not one of them, right? So, and that's why they're so antsy about how the Fed should be raising or lowering rate. Right now, they're throwing a tantrum, right, by laying off people, you know, doing the stock buyback still, but you know, they laying off people and all that stuff to try to mitigate that. And of course, like, people are laying off. People, like, even Walgreens is like closing down stores. Even Rubio's closing down stores. So yeah, people are feeling the pinch right now. And not many company has this ability like we do in GameStop. So, you know, this is, again, I'm talking about the balance sheet here. I'm talking about the company. I'm not talking about the stock price. Obviously, the stock price could, you know, go down with the market. So just be aware of that. Just because the stock price coming down doesn't mean that the company is doing worse. It's just the market condition, right? So that's what I'm preparing for as well. or hope to prepare some of you for that as well. So yeah, I mean, $50 million a year, that would give us what per quarter? $12 million per quarter. And so again, if they were to do that, then the next quarter two, right? Because right now we're doing wait. This is quarter two, right? What we have quarter one. Wait a minute. I'm sorry. I'm kind of confused. Hold on. So this is quarter four. Sorry. And then this is quarter one. So coming up, this report would be quarter one. Coming quarter two, since we have this, I'm sure that $12 million, if they put it in the marketable security, $1 billion in the marketable security, then they would have $12 million to cover whatever they need to, right? And so since last year, quarter two, I'm talking about quarter two, not this coming up report, okay? The next one. Then we would come out even above the $2 million, $2.8 million from last year, right? So again, the net income will continue to snowball, like slowly but surely snowball into something greater than, what we're having today. And again, this is why I think call option kind of pull out of nowhere volume coming in just to try to predict that, that the catalyst that kind of send this company into something different, right? Of course, like we have Larry Chain telling us exactly what's happening to the company, or not exactly, but, indirectly kind of tweeting about the generality of what it's like to have no debt, to have great cash on hand, like good cash position on hand, have great leadership, have leadership that is aligned with shareholders, mission and all that stuff. Those are very good, prospect to kind of like, oh, something is happening here. I'm ready for the gamma. I know, right? Like gamma ram and all that stuff. That's good speculation to go by, but I think it's hinged on the facts that whether somebody's going to exercise their call. And again, it's very arbitrary at the moment. I have a theory about that too, so I'm going to share it in a minute. But let me go through all the number here first. So what was I thinking? Yeah, so the snowball is going to happen, no matter what. And even if they don't put, more in the marketable security, this would cover it already, like, to cover $2.8 million loss. Because, I mean, if you think about the operating expenses, they have lowered it even further, right? And so the next quarter, I'm sure, if the economy is not doing well, they could close down a few more stores, right, in order to be more profitable in that sense. I'm sure the numbers hasn't been like the perfect number yet. Even though we're coming out profitable, we're not like abundantly profitable. It still needs some massage in the number of stores. Perhaps more location needs to be looked at first. And then on top of that, at some point we're going to expand, right? At some point we're going to go to a different area that will cover more foot traffic than we have been. But before doing that, I'm sure leadership is trying to come up with the formula, like store first square foot or something like that, right? Who knows? Like whatever strategy that they're doing I think it's working very well. Now, of course, like, for the bear out there who hates GameStop no matter what, because of the negative press or because they believe in the, narrative that the mainstream media is putting out for GameStop. I've watched Scott Allen last night, and it was like, of course, like the same narrative, like, oh, Ryan Cohen doesn't do shit, and there's no vision for this company. This company is just retail based. Like, we don't need more brick and mortar stores. Like, really, we don't need more brick and mortar store. Like, how many people would hate to shop online now sometimes? Like sometimes, yes, it is the convenience aspect of it, but there are people who wants to go to the store, who wants to talk to other people, interacting with the human, people on the counter. Again, just that, to have the conversation. And now that they have a trading card, ability to trade trading card. Hold on, let me. So again, the store serves a purpose for some people, okay? And to say that it doesn't add any value, that's not completely true. Yes, most people want to shop online, and if you want to shop online, you could do that too. They have a website so that you could do it, just that if you want to be like. But how about, like, why would you want to shop at GameStop? Well, they have promotions, like they have good deals out there. You see, like every single time they have, ways to entice you to shop. Now, with this collectible card, obviously this is a good business venture. I'm sure this is like kind of what they wanted to do on the NFT marketplace. It's kind of like similar, right? Because you could collect trade collectible, and this is physical collectible. And so instead of the NFT platform, now it's becoming a reality in the sense that you're creating a physical thing. And this is big. I mean, look at this. Like, we just rolled it out, a couple weeks ago, right? Or was it a month ago? And we already have many people who are like, look at this, like $800. Like, of course, I wouldn't buy this. Just my own thing. I'm not a collector. So, I wouldn't know what to do here. But as far as like people want to speculate on whatever, like, look, we had these, the sport trading card right here. And to say that has no value added, that is just ignorance, right? Again, to me, this serves a purpose. Number one, it allows people to trade in something valuable for cash, right? If you're scrapped, if you are in need of cash and, need to sell something quickly, you got it. There you go. GameStop has it for you. And so this is good for collectors. This is good for people who wants to trade in their collectible for cash. I know, like, people are scoffed at like how GME doesn't offer the fair market value, but I saw a lot of video as well that they were doing somewhat, good, somewhat good. I don't know what I'm trying to say. What I'm trying to say is that, there are people who are willing to trade in. Otherwise, you wouldn't see this at all, right? You would not see the plethora of trading cards here that that they put out for sale, right? So there are people who trade those things and enthusiastic about trading in and out too, right? And like I said, they could speculate by buying one of these, and then it's like, oh, maybe later on in a year or so, it's going to go up in price. So again, this is another form of investment that you want to do, right? You got a GameStop trading card. This might blow up when GameStop's going to be a meme stock again, right? Meme stock. Sorry. The price of GME is going to be like, a meme. That's what they say. Like hundreds of thousands of dollars, perhaps. Who knows, right? Okay. Again, this is a realm of speculation. And there are collectors out there who wants these cards, who wants to buy, like, who would want to buy $100? Well, hey, it has some value there. So, look at this, $1,000. But anyways, as a pro member as well, you would get more, for your trade-in, or, paying less to buy it, but when you trade in, you get more in that sense. So that's a value added as a pro member. And if you want to trade in your card for a system of gaming, you know, like maybe you want to upgrade a, you know, your game, you know, the console or whatever, right? You have that ability now with GameStop. And so this is a natural flow of customer acquisition, like a smart way to do that, to add more value to the company. So this is a good thing. Again, like people always, like the bears always like, oh, this is nothing, you know, don't tell me about the trading card prospect and all that stuff. Like BS, man. Like you're always like moving the goalposts. They always said, oh, there's no innovation, there's no vision for this company. Well, there's doing something new right now that, you know, perhaps is going to do something, right? At least something. And so now with that trading card revenue, you won't see it until the next earnings call, which is 3 months from now. Right, you won't see it, the profit from that trading card, and I'm kind of curious myself to see how much they are able to bring in for the Q2, right? Because again, we just kind of announced the trading card recently, so the majority of revenue that comes from that trading card would translate over here to the next Q2. And so if you were to kind of compare to the last year, Q2, $2.8 million loss. I mean, I think we could beat that net revenue or net income, right? As far as revenue, of course, we want to beat this price point, but it seems like, you know, the growing pain for us is to try to expand that top line revenue, right? Once we address this top line revenue declining, you know, what else are they going to say, right? I'm sure they're going to find something else to say about how, oh, it's not growing fast enough. Look, oh, so-and-so do it faster and all that stuff. Like, really? Okay. Again, they're always going to find something to say negative about this company. Now, I did say the collectible card trades will only enhance the bottom line. Yes, of course. Like I think so too. You know, acting as a middleman, right? I'm sure we like skimming off the top every time people are trading in, and depends on what they are into, like whether they want cash or store credit. That is still like store credit obviously is going to kind of expand the bottom line, right? We're gonna, I think it's going to come into a liability for the company. But again, in the future, that money would go into the company, you know, top line revenue anyway. If the customer spend, you know, in-store credit, you know, buying our, you know, whatever we're selling in the store. And so again, like it's a win-win. I think I don't think we have anything to worry about as far as like risks. I think they have ways to, you know, find out what is real, what isn't real, you know, to kind of weed out the fakes one, right? So I'm sure they have the precaution to test, you know, which one is fake, which one is not. Yeah, so that's the only risk that, you know, people were kind of talking about how they could, you know, technically get a fake one, and that's going to be a liability for the company. But yeah, I mean, every company has some risk. If you don't take any risk, how do you, you know, come up with a great idea about anything, right? So, even selling, you know, software have risk involved in that, even though software, you know, traditionally costs less. But the physical item has that risk involved when, you know, loss and all that stuff. But you could technically write that off as an expense if you lose things like that. All right, so let me take a look at the chart here. Obviously, this is a Germany. I don't know if Germany is trading right now. It doesn't seem like it's moving. So currently 21.21. That's his Germany market right there. So let's look at the American here. So on Friday, we were closing at 23.14. Now that's pretty a good price to kind of close at. Now I'm still kind of looking at this gap fill here. There's still a possibility that that gap would be filled, and that's why I put it in the yellow lines. But the complete gap fill is actually on the upper end right there, $19 and some cents right there. So let's just say 19 even. So that's a level I'm still looking at to kind of more so than the rest. Or write a cash secure put right there to try to, like, capture that premium. And I could do what I usually do when I get the premium. I just turn around and buy the share right away, right? Now I usually try to wait a little bit towards the midday right there, because what I see every single time when GME trades, if you look, it's like immediately they just dump, right? Just like sell. So usually the first hour or so, it's usually the first time, the best time to kind of add more as far as shares go, right? Now the bottom level, I did it because I see, if you look at look left right here, you see a lot of price interaction at that level as well. So that could be a deep pull down type thing to kind of, you might be able to get lucky enough to buy it at that price. 18.50 or so, right? Lots of interaction in that area as well. See, like even this one. So historically, anytime you have price interaction from the past, that's usually a very strong support. So I mean, this might be the one. This is might be the support already being placed right there. But who knows? Anything could happen in this. They could do a W thing they call it. Right? Sorry. Again, this is just me trying to predict the next movement. Of course, nobody can. Like, there's a lot of good technical analysis people who thinks that they could predict the bottom and all that stuff. So who knows? But yeah, I'm just doing this for fun. So please don't take any trade on that. On my terrible technical analysis. Okay, Michael, PSA graded item only. Make it easy on frontline employee for trading these in. No special evaluation or appraisal skill are needed. Oh, okay. That's cool. I mean, is that why we only take the 8, 9, and 10, right? Is that a good assumption there? Because again, I'm not a trader. I mean, a collector, so I don't know the ins and outs about what these means. But I trust leadership to know what to do. To prevent the reputation of selling something fake to people, right? But I think if no appraisal skill required in handling these type of thing, then yeah, I mean, that's a good place to be, I guess. Again, like, I'm sure the bears they'll find a way to kind of infiltrate this, or saying something about how Jimmy doesn't do enough to prevent certain things. But hey, I mean, I don't know what these people expect, but you know, of course, I want Jimmy to be careful not to sell anything fake or accepting anything fake, because that's liability for the company. But I'm sure we have ways to mitigate that risk, right? Like I said, you could just write that off as a loss for the company or expenses for the company. So yeah, it's cutting down to the bottom line, but I think it's a risk worth taking, in my opinion. Hello, hello. Jimmy's too strong. Yes, too strong. Meaning frontline employee can take the collectible and look it up to make the customer an offer based on the PSA graded, no bags, and front investigating like a pawn shop. This is huge. Okay. Okay. I think that's probably explains why we have so many inventory already. You know, hundreds of pages already. So okay. I mean, if it's that easy, then sure, you know. But again, like as a non-collector myself, I would not know which one is fake, which one is real, you know. And so, but that's another thing too. Let's say like I will start as a collector, and you know, I buy one of those cards and all that stuff. Of course, I will try to learn as much as I can about the collectible myself. You know, again, because we don't want to, you know, get any fakes and all that stuff, or I wouldn't want any fake ones on my collection. I wonder, you know, how many people were just starting to collect, and when they trade it in for a value, that's the value that they're happy to get, right? So if you could turn a piece of card into straight up cash, right? Even though you think you don't know how valuable it is, it's still some value added to you. Like you might, you know, learn to grade a card yourself or do more research on the card and then get a better trade-in value, right? But the fact that Jimmy is willing to do that at the store right then and there, that is a convenience, you know, a convenience thing to like to be the middleman of, right? So to speak. Anyway, I hope that makes sense. I collect, yes, PSA graded only is the easiest, best way. Okay, good, good, good. I mean, it's very informative that, you know, Michael, that you are, you know, because again, I'm not a collector. So thank you for the input there. Okay, so let's look at the price point now. Let's look at the gamma thing. I know people are very, look at this. Okay. Again, this is like the snapshot for the January, I think. I bet. And it's going to trade sideways for a while. So that's the expectation, right? After that big jump, it's going to be another explosion right there. That's what we thought. But anyway, so this is I'm sure people are doing the technical analysis too here. Upside target for 27 and 32. Those are going to come into play, obviously. Again, traders, you already see a lot of people covering GMEs, like coming out of the woodwork again, right? When GME was at $10, nobody paid attention. So this is why I think it was such a great opportunity to buy at 10, because when it's boring, when people are not paying attention, usually the stock price would kind of crater. And usually that is the best time to buy any asset that you want to buy. Buy when it's boring. Buy when people are not talking about it. So now when people are talking about it, usually this is the best time to sell. Now, I'm not telling you to sell GME at this price. It would be ridiculous to suggest that. But what I'm trying to say is that, be ready to, take some precaution. Now, if you want to add more, of course, like some people would like to average up or whatever. But of course, I have my price point there that I'm not willing to risk, you know. But my long-term bag is still there, intact, and ready to take some profit here at a very steep price here. Okay, steep price. I have a number in mind, obviously, that it's like, okay, if it's like thousands of dollars a share, I will, you know, sell the majority of my moon back here. But let's see. Yeah, I mean, people are excited about the company here at large. Okay, so now let's look at the option chain. Obviously, this is from last week. It's already expired. Now it's expired in the money call option here. If people exercise this particular chain right there, then market maker would have to go to the market and buy 400,000 shares of GME to deliver, right? So, and then of course there's a lot of call out of the money there. Now my theory is this. Hold on. Okay, so there's a lot. Okay, the support is right here if it ever dropped down. So 10,000 contract there. It didn't, so those are going to be out of the money, like right there. More put option is out of the money at the moment. So whoever bet the price gonna go down, never see the light of day. So for June, it seems like we are again kind of skewed towards call option being in the money. You know, 4-1 if you look at that, or 5-1 actually, close to 5-1. Max pain is still lower than the price right now. That's encouraging, and you see this little kind of cascading. I'm sure somebody is just trying to ramp up that gamma, right? I don't know if it's some entity that is trying to go long on GameStop, pushing up the price, covering, I don't know. Again, like there's some theories out there that some entity was buying to cover, but why don't you just buy the stock, right? Okay, so 25, of course, when it goes up to 25, 6,000 contract would be in the money. Will it go up to that price? Who knows? Hold on, let me see. Yes, so if these people exercise right here, sorry, if these people exercise right away to get the shares, then the market maker would have to go out in the wild to buy shares to deliver to people, right? And then that's what it's called, gamma RAM. If you don't exercise, obviously, I think the other possibility, again, this is just my speculation here, is that they are doing a poor man covered call here, right? So instead of exercising that shares right now, they would go to the short dated one. So this one is 21, right? June 21. So technically next week they could write 2 option here. So what would they do is, depends on when they buy it, right? They could do a call, sell call against it, against the in the money call, right? That's what it's called, poor man's cover call. So I'm sure some of that is happening too. I'm sure they, you know, try to spread it out here, here, and here, to try to capture that that run, right? And there's a lot of like 180 just in case, I'm sure, like just in case it goes up there. But meanwhile, they collect, you know, premium. Again, this is only $8 here per contract. So it's a YOLO, right? It's a gambling. The chance of you, you know, hitting it big over here, is not very very good at all, unless it's just, you know, an explosion. Is it going to happen within next week? I don't know. I think earnings probably would have a better chance for that to happen. Let's see. Okay, so currently close to 200,000. Call is in the money. Of course, that could be added later on, or today, or tomorrow. Who knows? If it ever go up to like 300,000, yeah, that's going to be exciting too. But yeah, it seems like this is not like normal at all. Like normally it's like this bull. If you look at the other, let me see, the chain. Like you don't see like a straight up line like this, right? So I don't know. Again, institution is trying to ramp it up. Somebody, right? What is this one? This is, okay, max pain is 19 there for June 28. So maybe that is when they're trying to drop it back down, wherever the price is going to be. July, nothing exciting there. Of course, this could change at any time. Like usually the short-dated call, like a month out, is usually have some more activity than anything. Yeah. But hey, it's remains to be seen. I think, you know, there's some exciting movement happening here. Okay. So let me try to end it, not here, but let me switch gear. I know I'm talking about the price point and all that stuff, but let me switch gear to, you know, what is important about like being the investor, whether you want to trade in and out or whatever. And it's worth kind of like learning from, you know, people who've done it already. And of course, everybody knows who Peter Lynch is, I hope. And he has some good advice, you know, I think, you know, to pick stock. And I think he has a keen eye on which stock to pick and which one is the winner and all that stuff. And I think if he ever take a look at GameStop, I'm sure he's gonna, you know, would buy GameStop as a great turnaround company, right? So let's listen in, and I'll be right back.
So, Peter, your investing philosophy is often summed up as buy what you know. And there's some truth to that, and it's also often way oversimplified. Sure. Can you explain what you did mean by that and what you didn't mean?
Well, it bothers me that people are very dangerous when they invest. This word play the market, that's a dangerous term. But if you do some work, do some research, know what you own, look at the research, look at the balance sheet. If you could add 8 and 8, get fairly close to 16, you can find out this company has lots of debt, no cash, they're in trouble. You shouldn't own it. So a little bit of research. People are careful when they buy a refrigerator, careful when they take a vacation. And they'll put $5,000, $10,000 some stock to hear on the bus or at a party. That's dangerous.
So when you say buy what you know, you also thought that the regular investor might be able to get an inside advantage by sticking to an industry he's familiar with, or seeing something that she realizes is a great product.
Imagine if you were in a mall the last 50 years. You would have seen Gap when it was hot. You would have seen Limited when it was hot. You would have seen when it was not hot. You would have seen when they were starting, people weren't excited about Gap anymore. And then you do some research, say, well, gee, there's a lot of limited stores, but we're only at 20. You know, they can go to 400. So you see a company. I did really well with Dunkin' Donuts, a local company. I did well with Stop and Shop. But people could see that these are really some people showing up, or I guess the Sunglass Hut, no one's there anymore. So I mean, that's research. That's fundamentals.
So
but you don't leave the mall, though, and buy that day. You have to do some more work.
That's the important point.
Yeah.
So today, there's so much information everywhere, information overload. Does that make it harder for active investors? The indexers say everyone's got access to the same information at the same time. You can't beat the market.
Well, the way you beat the index is you avoid the stocks to go down. You avoid the steel companies and the oil companies and Sears and Penny, and where the companies are deteriorated. I mean, companies are dynamic. behind every stock, there's a company. These are not lottery tickets. So you're trying to find the companies within the S&P 500 that are doing better. They're going from crappy to semi-crappy to good. That might take a couple of years, or they're going to grow for a long time. And you're trying to avoid the companies that are going south. That's how you beat them. Or you find some companies outside the S&P 500 that are great companies. CarMax was not in the S&P 500. They went up 200-fold. There's a lot of companies that enter, and a lot of their great performances before they go in.
Now, a lot of people, when they're lucky enough or smart enough to get a company that's going up, they take their profits.
Right.
And you made the case in a book that you should actually hang in there with the really great stocks, and you even got a call from Warren Buffett as a result.
Yeah, in 1989, I'm at home, and the phone rings, and I thought it was one of my friends, but one of my daughters, I think it was 6-year-old Annie, picked up and said, "Gee, guess there's a Mr. Buffett online?" I said, "This has got to be a joke." So I pick it up, and this Warren Buffett, I'm from Omaha, Nebraska. I read your book. My annual report's due in 2 weeks. Can I use the line? He said that all in about 7 seconds. And I said, "That's great. I'd love to do it. What's the line?" He said, "I love this. It's been waiting to do this. When you sell your great companies and add to the losers, it's like watering the weeds and cutting the flowers." And he said, "I want to put it in." He said, "If you ever come to Nebraska, you don't call me. Your name will be mud all over Nebraska."
So did he call him?
Oh, yeah. I've said several times we play bridge together. We've had several meetings. Great guy.
Another point you've made, and this is, I think, particularly relevant 10 years into a bull market, is that I think you said more money has been lost anticipating a downturn than actually in the downturn. Can you explain?
Well, obviously, the market's gone up tenfold since I stopped running Magellan. So you make more money on the upside. The market's going to be a lot higher in 10 years from now, 20 years from now, 30 years from now. Trying to predict the market is really a waste. I don't know what it's going to do. It can go down. When I ran Magellan, 13 years, it declined 10% or more, 9 times the market.
Wow.
I had a perfect record. I went down more than 10% every time. Whatever the market went down, I went down more. But over the long term, the upside is more than the downside. So you got to say to yourself, do I need the money in the next month? Do I need the money in the next year? Do I have kids going to college? Do I have a wedding coming up? Then you're a bad investor. If you can keep putting money in, you have 5, 10, 15, 20, 25 year, you should do well.
One thing we're thinking a lot about at Barron's is the secular changes we're seeing in the market, where there's so much disruption that we wonder if certain industries, they may be cheap and they may just keep on getting cheaper. I mean, retail would be an obvious one in some cases, victims of Amazon, but even the auto industry, very low price earnings multiples. Maybe the market sees something. Do you think secular changes is moving more rapidly now than it did in the 80s when you were running money?
No, I saw the textile industry deteriorate. I was recommending all the stocks on the way down. I saw the shoe industry go away. Industries can go from terrific to terrible. There's a great expression in the textile industry that helped me a lot.
Textile industry, yeah.
It's always darkest before pitch black. Just when you think things are terrible, they get terrible squared. I mean, so just because industries are getting bad, that's not a reason to invest. Wait for things to get better. Because, again, somebody might be involved in steel, they might be involved in coal, they might be involved in iron ore, they might be involved in plastics. They'll see aluminum pick up before I do. So that's a cyclical turnaround. That might last 2 or 3 years. You might see it way before Wall Street sees it.
One broad area that you've recently said might be interesting is energy, and it's very unloved on Wall Street right now. What do you see in there?
Well, the difference between a glut right now and a shortage is like 1 million barrels a day. The world consumes 100 million barrels a day, 1 million each way. So if the economy stays okay, and these shale wells, you do 1,000 barrels a day the first month, a year later they're 300.
Wow.
And then they're 150.
Big drop off.
It's a real treadmill. And right now there's no private equity money, there's no IPOs, there's no bond market, the banks want out, private equity wants out. Shale's going to slow down. So these people think that shale's going to keep growing 2-3 million barrels a day. We've gone from 5 million barrels in the U.S. producing to 12.5. People think that's going to continue. I don't believe it will.
Peter Lynch, thank you very much.
Wow. Towards the end there, he's talking about energy. Now, I think, again, like a point to kind of take a note on is the fact that he's saying to buy things that you know, right? And if you could find a company that has low debt, right? Great cash position, and used to be a terrible company, and then now it's much better, based on the balance sheet, obviously. this is why, it's much better to always have your own, conviction in something, right? And to base your conviction on, the balance sheets itself. And to say that, again, this company has been improving, slowly, gone from the worst to not so bad, and then now it's a lot better, in terms of net income, decreasing the footprints that we have been doing the last 3 years, knowing the economy, knowing what to expect, again, this is why leadership, I think he didn't mention anything about leadership or anything like that, but I'm sure, that's kind of like tangent in the fact that if you could improve the balance sheet year on year, quarter on quarter, that is indicative of a good leadership there, right? But yeah, so if you were to try to beat the market, all you have to do is just look at the company, at a kind of subjectively. And the other points that he was talking about, how it will become dark until it's pitch black and all that stuff, meaning that don't, invest based on, okay, how bad could it go, right? How low can it go? You should invest based on, whether it's going to be better, right? And so I think this is why my thought is that this is why institution is coming in right now rather than last year, because last year it was like, to them, it wasn't that great, right? Yes, the improvement is there, but institutions usually love to see all the positive first before they jump in. And so they, Brian Cohen has to prove to them that, number one, we're going to be able to be profitable all quarters, not just quarter 4, right? And so we're close. We're pretty close. And of course, this first quarter was the first loss that we have. So we need to have 3 consecutive positive quarter for institution to start pulling in again, right? I'm sure they're slowly, kind of inching up to the ownership of GameStop right now. In my opinion, obviously, based on what I see here. If you look at the Fintel, Fintel. Oh, yeah, institutional ownership. I think I have it here. I think it's a better. Cool. Michael, thank you for Peter Lynch video. By what you is true. What you know is true, you mean? GME fits the model. Of course, like I feel like even the book that he had, like 12 ways to pick a stock or something like that. I think I did a video on it. Now I forgot how many steps to, kind of look into which one is which. I think one of the steps was like to look for a low institutional ownership company that, institution might not even take a look at it because, again, it's not that great in their book. But if you could find a company that is low institutional ownership, institution usually would buy it from you when the company turns around. And I think it fits the bill for GME as well. Because again, like, institutions don't know everything. Like, sometimes they are just blind by the small incremental change. They usually wait until the company is well profitable already in order to add it to, or wait until it's going into the S&P 500. That's when they're, kind of balls deep into it, right? And, I think that is happening, like, as we speak right now. I mean, there's a little tiny increases there. And again, my thought on that is that they are trying to do it slowly so that nobody kind of take a note of it, right? Because again, algorithm and all that stuff, they're searching for those type of, big orders, and they just don't want to kind of spike the price too high. Then they won't be able to get into this company and hold it for a long term. And of course, they're trying to do everything they can to shake retail out of this company. And we all know this, like, it's not a rocket science. So currently, if you look at the short only, firms out there, there's only 7 of them. I pointed this out before. Now it used to be 6 or something. Now, so you have one more short only firms, and you have firms out there that are hedge it up and down. 19 of them are long and short, and then you have majority going long. And so again, this is off of how many percentage ownership here? Man, doesn't say here. 13D. Am I blind? I don't see. So this is retail. Ownership. Markets. Maybe the overview would tell me. Sorry, you guys, I'm just looking at the number for myself here. Okay, so number of shares of outstanding is updated already. Book value is still somewhat, over fair value, in my opinion. No, it should be less than that. Maybe I'm not accounting for something, so I need to reevaluate that point there. But anyway, of course, this hasn't done much there, but of course, this is a clean slate, right? You want that, from losing money, now they're making money. So this is a successful turnaround company that you want to kind of sink your teeth into. Like any investor out there who, imagine if GME just IPO today with the balance sheets that they have. You think the bank's gonna sell it to you at $20 a share or $23 a share? I'm sure they're gonna sell to you at least $100 a share if it's IPO today. So that's my thought there. So factor score, not sure what this means. Momentum, obviously, that's have good momentum, I guess that's what it means. Insider sentiment, half and half. What? Well, at least it's more than 50. Guess that's a good thing. Growth, dividend, not yet. So growth is kind of I guess this is a score that they're placing on GME there. It's getting, hold on, you guys. Of course, price target, it's ridiculous. Oh, at least they give a little bit of a range here. Okay, some websites don't even give you a range. So the range for these people, they're telling you that the price target should be at $7.35. Average $6.50. That's ridiculous. Okay, of course, only Wedbush, right? Underperform. Only one analyst out there in the world. Okay. But keep in mind though, when they're ready to pump GME to the people, they will flip the script, right? So it might take some time, might be a couple more years until these people would be forced to cover GME in a good light, right? Currently, leadership has to still, I think, still try to have to demonstrate to these people that we could do it, right? Whether good financials and all that stuff. So we need to make more money. That's what these people expect. And it's coming. I have no doubt that we're going to be able to be positive from now on. You know, like even a couple $1,000,000, that's still money. Like people, what are they expecting GameStop to make? $2 billion a day? Or like what? It's like, come on. But this economy, any amount of money that is in the plus is a good, you know, a good sign, right? At least, you know, you keep the business going. The business itself is profitable, right? Now, the scale of profitability, that's what we need to do. We need to demonstrate that at least we could bring in $200 million a year. And I think that's a pretty conservative estimate, in my opinion, you know, in this industry here. So if we could pull in that type of money, I think that's going to be a good demonstration that we could be scalable. It's much scalable than anyone could predict, right? So remain to be seen. Like I said, 2 more years is a good kind of like price data to go by in terms of what this leadership could do with the scale that we have today. Of course, I'm expecting like $300 million to $400 million a year. But imagine like 2 years from now, you know, when the economy hopefully will go back to normal, you know, with the interest rates and all that stuff. You know, there's an expected rise in interest rate, right? And for some reason, S&P 5, I mean, the S&P keep going up in price. Makes no sense. So a pullback is due. There's due for a pullback. So I think Jimmy is ready for that too. Now let's look at the short interest here. Of course, like people keep saying, oh, short interest is not that high and all that stuff. And people are still thinking that people are not closing, you know, their position and all that stuff. Well, I mean, traditionally 18% was a pretty high, you know, short interest to, you know, for the company of this popularity. I know, again, this is just a reported short interest here. The amount of shares is kind of like increasing, right? We know that. Off exchange, we also know that as well based on this right here. Obviously, we've been tracking that for quite some time. It's encouraging to see that, you know, the percentage of short interest or short volume is lower. However, if you look at the number, because of the amount of shares being traded every single day, it's a lot higher than it used to be, right? So look at that. 50 million shares, 31 million shares. Again, we don't have any shares to do any transaction with. Now, people who've been accumulating this company for a long time would tell you that this is like, how are they going to deliver those shares? And even with the short exempt right here, off exchange short exempt, hundreds of thousands of shares, millions, like right here, to try to dampen the price action. And again, this is legal. I'm not saying it's illegal. It's unethical, but it's legal to do. So long as the lit market hasn't been released, or the order flow doesn't release to the lit market, you might not get this addressed. So this is why, again, this is such a great opportunity for people long on this company who want to see the success of this company. Is kind of like bullish on as well. So this is an added value to the company itself, is the fact that the shorts hasn't closed, even with the 21% of the companies being shorted, is a high stake there. So again, they're playing with fire, right? In my opinion, whether they have the ability to deliver these shares at moment's notice. Okay, if you think that you could deliver the share to people who've been buying since, even up here, I'm sure some people add more to their position, thinking that it's going to go, to the moon and whatever. And of course, like the bears out there who thinks that, short never close, like they surprised because of this, whatever. Like, remember when GME was at $10, nobody, like, they come to my channel or Moran's channel. It's like, short's already closed. You're so stupid to buy this company. This company's going under. Look, top line revenues down by 11% or 6% or whatever last year. It's declining business. It's dying business. Whatever, negative sentiment that you ever heard about this company was said over here. But then when this happened, Roaring Kitty is back, right? Short squeeze is near, and short squeeze is back. GME is back from the dead, right? For what? Because retail. Like, I thought retail left, right? Like, again, it's a narrative that you need to kind of like combat as well. And this is why it's fun for me, because I could see the manipulation that is happening in the media to try to get you to forget about this company, right? And again, this is why they push you towards other company right now. Of course, this is the main one that I see push out to people. See, short squeeze again. Like, how high can this go? And the same actors, who's here's again. These are traders. I'm sure you could make money trading this, but as far as like to pin it, as to say that GME is the same thing, it's not. So just be careful. This stuff gonna keep happening to try to, again, like anybody who got into this and get burned into this company, I'm sure they're gonna use that money to pay for GME shorts or whatever, right? Or closing down their position, again, to steer people away to perhaps thinking like, I could sell my GME real quick and then go into this company, and then because it run faster or whatever, right? To try to get you to X out of your position. And it happens to Bed Bath and Beyond people too. Remember, Moran's kind of like talked about it extensively. So if you're new to this, go to Moran's Rants. He's the guy for this type of information here, to try to prevent you from losing money here. Now, these people are day traders, okay? They're trading penny stocks, and this is how they make their bread. Their bread and butter is right here. And of course, we know who this person is, pumping, a whole bunch of fake ones, like Mullen Automotive. That's a famous one that he pushed out. So yeah, everybody's gonna come out of the woodwork. I had to cover GME as well. Traders, I see a lot of technical analysis video coming out of the woodwork here. All of a sudden, all of that hype is coming back. So, all right, guys, I feel like I'm kind of like, my voice is going under, going to sleep on me. So I'm just going to kind of end it here. I just want to kind of cautious people. Of course, Matt Core is back. Whatever narrative he's pushing now. Again, this is why it's so very important to kind of stay grounded here, because then you know which number, what price point are you willing to buy and all that stuff. Let me show you before I let you go here. I kind of like clean this up a little bit. This is my strategy, obviously. It's tentative. It could change at any moment. Depends on, the need of the hours, right? In my opinion. So currently, of course, I have my moon back here, and I will hold a certain position here forever until these things come to fruition, unless the price goes up to like a crazy amount in which I can't refuse. Then I will let you know at what price point I exit out. But as far as the long-term one, I would never completely, exit out of this position. Perhaps I could say sell half of my moon back here, or maybe like, keep a quarter of it, just in case, right? Just in case it's $1 million a share. Who knows, right? Again, this is just me speculating. But no matter what, I would never kind of like zero out my position here. Just to preface that. Now, as far as the strategy for the run up, for the play, bucket that I have to kind of sell on the run up, just in case the MOAS doesn't, go into the stupid price that we're expecting, or I'm expecting, then, I could kind of take advantage of the run up as well. So I will play by ear, obviously, to kind of look into the chart and what makes sense to me. Now, as far as my buying, kind of adding on to my moon back here, of course, I'm always looking to increase the shareholding for me as far as the long-term investing bucket here. Below 32, why 32? Because that's 5 times its book value, in my opinion, right? And the book value that I use is like right here, $6 and some cents right there. And I times that by 5. So anything below 32, it's still for me. So I'm just going to buy at the same rate. So I, again, really depends on what my expenses and all that stuff. So usually I always try to do $200 a month on that particular, price point. But of course, like sometimes I have more. Of course, I will put more onto that. Now, I will slow my buying rate at this particular price range, half it, or, again, depends on what I have there. And I will stop buying at 65. Now, this is just my strategy, not to get burned, to again, like, unless GME could add more to its book value, I will consider this price range again. So this change is dynamic based on the value of the company, in my opinion, right? Because I do my own analysis here. There's no rhyme or reason for anything. Hey, Carter, thank you. Appreciate you. But yeah, so again, always have a strategy moving forward, so you're not going to get burned on any decision here. Of course, in my opinion, this is a good long-term hold for me. Based on the balance sheets here, based on the storyline, based on anything, like everything that have anything to do with this company. It's just so exciting, right? The backstory, the whole market is looking at this company. This is why, it's the most popular company to trade, and you could see it in the on-balance volume, right? It's much more popular than any, in the current time anyway. Because if you look at it, like in the history of the company, like hundreds of millions of shares a day. But if you do a daily candle here, you could see like 6 billion shares being traded, whether in and out or whatever. Yeah, it's still stay elevated, right? And so, I don't know. I mean, is that indicative of people just, again, trading in and out, like high frequency trading and all that stuff too? So I'm sure that's happening as well to try to tame the price, tame the momentum. Who knows, right? But yeah, I mean, just be vigilant. I'm still looking at that, gap fill right here. Once again, so I will eye that for Monday. I know it's always exciting to go into Monday. Weekend's not too much excitement there, unless I have somebody to go out with, but that remains to be seen. So there you go. Let's see. That gap fill. Now it needs to break this particular bar here. Now, I don't know how plausible it is based on the option chain that it would break the $20, because number one, you have the share that's being bought from, well, who knows, right? Who knows who GME sold to, or who bought that share at $20 or so. If you look at the, right here. So when we sold the share, it's around this price point right here, 2074. If you look at that and it's like, oh, okay, that's less likely to break that resistance. But because of this gap fill, perhaps that's the magnet there to try to shake more people out of this play, or, retail, whatever, unsuspected retail. So you might be able to kind of scoop some more at the lower price tier. So of course, I'm always looking to buy GameStop at a lower price. It's a bargain, right? You gotta be smart about that. Now, of course, the other magnet as well is that gap fill up top there too. With the excitement, I don't know. Again, I think it's more likely to go up than down. Again, don't take any trading advice here. I'm just an amateur on all of these gap fill here. Of course, I've always observed GME to kind of follow a little bit of a gap fill. Anytime there's gaps, there's always going to be fill, like this one right here. See, that's like a no-brainer right there. The moment you see it's gapping down, there's bounds to kind of fill it up at a later time, right? We just don't know when it's gonna do that. Yeah, run GME. Yes, so all right, so that's all I have for today. Now let me just leave you with now I watched Jack Litet's guy and he had some good songs. So let me what is it? Wait, hold on, let me go to my history here. Been watching a lot of random video here. Not this one. This one. So I'll just leave you with this song and have a good one.
Look at my boy Jimmy. Look at Jimmy boy. Look at Jimmy boy. Look at Jimmy boy. Look at my boy go. Watch this man fly. It's time to run. Run, Jimmy, run.